Now we come to the goals tab where we're able to set goals. The first thing you see when it comes to the goals tab is based on the goals you have set, what changes are recommended. For example, there are two major places where changes are recommended: business revenue and owner's income. So here, based on the data we have there now, and later on we'll see how to enter the data, we see that the recommendation is to increase sales growth rate by 33%, increase price by 226%, increase revenue by 80% if they're going to meet the goals they have set. And for the owner will have to decrease the amount of hours worked by 57%, increase the owner's pay per hour by 305%, and increase owner's pay per year by 74%. So this is just based on the goals that the owner said they want to have. This is what they'll need to do. Later we'll see how to set those goals and enter those data and kind of adjust them accordingly to something that is more feasible for you. So when we scroll down, we'll see where we can actually enter some data. The yellow tabs are the only place yellow cells are the only place we can enter data. So here we see the actual sales growth rate from the most current year entered was 47%. And this, we can set a goal to 80%. Let's increase our sales growth by 33% more. And then also we want to increase our revenue per hour to $112, which brings our recommended pricing to $140. So that's a 226% increase. That increases our revenue by 80% to $450,000. The pricing per hour adjustment is done because there are going to be errors in pricing. For instance, you might charge $50 for a job because you think it'll take half an hour, but that job's end up taking 2 hours, but you can't really go back and really charge the customer that because you've given them a set price, so you kind of eat the cost. So because of that error, there is a margin of error added to the revenue per hour, which becomes your recommended price, and just to capture those margin of error, so you're not the one eating up the additional costs of the additional cost of those mistakes that are unavoidable. Now, if you're making too many mistakes, that you have to look at your processes, but just the normal errors that happen in business, as we come in and go out. And then also, you look at the owner's pay goal. The owner is currently working 3,500 hours. They want to reduce their hours to 1,500. Maybe they just had a child and want to pay more attention to that child, whatever. So that's a goal. And then we'll see what it takes to do that. The owner's pay is $46,100. They want to increase that to $80,000. And at the same time, they want to maintain this percentages for their main cost categories, which is cost of goods sold, marketing, labor, and business, and yet have a 35% net income. So later on in the next slide, we'll see how that plays out in the projected financial statements. So once we entered our goals, it'll be recommended you go scroll up again and look at the goals charts. And then once you do that, come back to the projected income statement by scrolling down. Here, so to achieve the goals, we see we need revenues of $450,000. Cost of goods sold will be $22,529. Marketing will be $22,529. Labor expenses $116,000. Business development will be $22,529, and admin expenses $126,165. The net income will be $140,789, which is only 31% of revenue. If we scroll up, we see we actually had a goal of 35%. The reason why this is red is because mathematically the goals we have set are not possible. So we have to make some readjustments. So we have to figure out a way to keep admin expenses to 24%. And then let's see what happens to our goal. Our goal is now 35%, so the red is taken out. So this is a very good way to just put in some numbers, see if your goals are mathematically possible, and then just go to the next module and create a budget. A budget is the step-by-step plan. It's like your strategic plan in numbers that tells you, like, you take each line item, look at it in details, and see how is this possible. How can I spend $22,529 in marketing and increase my revenue by 80%? How can I keep my administrative expenses under 24%? What makes up those expenses? What am I spending on that I could skip and still meet my goals? My labor expenses, how can I become more efficient so I stay at 26% of revenue for 26% of revenue for labor? Like, well, what can I do differently? Is there anything I'm doing that I'm not doing? Is there anything I'm doing I should be looking at that I'm not looking at? And, when you look at that, if it's physically impossible, then you want to come back here and make adjustments. But however, you never know once you've actually really sat down and considered the questions. Lastly, we look at the compensation to owner and what the owner gets to keep at the end of the day, because it doesn't really matter how much revenue you make. What really matters is at the end of the day, what do you as the owner get to walk away with? Your business could be $1 million business, but have no profit, no cash, and at the end of the day, you still can't pay your personal bills, still can't take care of your family, still can't take care of your kids, still working so hard, and there's really nothing to show for it. So here we see if this projections are correct. We see the business gets to have $242,810 in cash. This is a 189% increase than they had in the most recent period. And then, estimated taxes will be at 32,000. And then, a safety net. You have to account for those things we don't see. We'll just do $15,000. So the free cash will be $195,166. This owner said they want to withdraw 50% of their free cash, which would be $97,583. So total owners pay in this case would be $177,583. Owner's time is $1,500, and then the total pay per owner's time is going to be $118 per hour. So, I mean, this is where the owner has to sit there and think, can I spend my time elsewhere and get better benefits, or is my business the best way to spend my time and get the most from my time?